Welcome, traders, to your exclusive peek at the anatomy of two precisely timed swing trades in Solana, SOL, which led to a massive total gain of 58% in less than 3 weeks. In this powerful and enlightening video, we dissect these actual winning trades to reveal key secrets of the proven Morpheus trading strategy. Picture this. Trade 1 zoomed to a mighty 26% gain in just 2 weeks. Then trade 2 exploded to an incredible 32% profit in only 5 days. And these weren't just hypothetical trade ideas. They were real-time live trade alerts sent to our happy members of the MTG tribe, fully verifiable. In this insightful video, we walk you clearly through the exact entry and exit points that led to these two big winners. As we walk you through this annotated chart, you will discover a potential roadmap to profitable swing trading in both crypto and stock markets. It's about empowering you to trade with confidence, regardless of what you trade. Finally, stick around to the end to discover why SOL may now be setting the stage for a huge breakout. This reliable chart pattern we're going to show you works the same in stocks, crypto, and any other financial markets, so you definitely do not want to miss it. Whether you're a seasoned trader or a beginner looking to level up your trading game, this video is your golden ticket to turning opportunities into profits. So bonk that subscribe button, ring the notification bell, and join the MTG tribe on this powerful, transformative trading journey. We'll begin by discussing how we actually found SOL as a potential swing trade candidate, and then we'll talk about the actual reasons for the entry and exit points of both swing trades so that you can discover the methodology behind the Morpheus swing trading strategy. One of the key hallmarks of the Morpheus trading methodology is focusing on finding stocks and crypto that have relative strength to the broad market. In the case of crypto, we look for altcoins that are showing relative strength to the benchmark coins, Bitcoin and Ethereum. In the stock market, we look for stocks that are showing relative strength to the NASDAQ and the S&P 500. Now, what is relative strength? Relative strength is not to be confused with the RSI indicator. Relative strength, in our case, is looking for patterns that indicate that the asset is outperforming the benchmark index. So that means that when we have relative strength, the stock or the crypto that we're looking at will typically rally to new highs ahead of the benchmark, and it will also set higher lows and higher highs while the market is often still setting lower highs and lower lows. We look for those divergences because when we start to spot relative strength, that emerging relative strength often becomes much more significant, and that leads to often the big winners and the next leaders of the bull market. So relative strength is really a key aspect of our trading methodology, and every day we're continually scanning hundreds of charts in both the crypto and stock markets for our two different services. And we share our top trade ideas based on relative strength in our chat rooms. We have the Morpheus Crypto and the Morpheus Stock Swing Trading chat room. In the case of SOL, this caught our attention because it actually formed a bottom ahead of Ethereum. And the chart you're looking at here is going back to the summer. This is June and July of this year. And you can see on the time frame here, it's a daily chart. On the left side is a daily chart of Ethereum. On the right side is SOL. As I move my cursor, you'll notice the crosshair moves on both charts. So we'll reference things I'm looking at as we move the crosshairs. So first thing we wanted to point out is that we noticed that SOL actually formed a bottom ahead of Ethereum. Take a look here back in June. SOL formed a bottomed out actually on June 10th. And if you look on the Ethereum chart on the left on June 10th, you'll see that we had not yet formed a bottom. In fact, Ethereum didn't form a bottom until about a week later when it bottomed out on June 15th. And by June 15th, notice that SOL had already formed a higher low. So we have a higher low in SOL, but a lower low in ETH. So it seems like a minor thing, but when you start to spot that initially, that's the first sign it gets our attention. So now we look for confirmation such as higher highs and higher lows ahead of Ethereum. So when SOL first caught our attention, we started to observe the price action and we watched it for several weeks. And we noticed that the relative strength really started to heat up right around July 7th. At that point, notice that SOL broke out above a week-long sideways range, tight sideways range. And during that same period, however, ETH had actually just sold off and pulled back to the support of its 50-day moving average. So again, we've got SOL breaking out and showing relative strength while ETH is pulling back. So again, confirmation that SOL is still showing relative strength, increasing relative strength to ETH. And then the relative strength really became apparent after another week of sideways price action. Then SOL blasted off to another new swing high and continued higher. And so that relative strength in SOL caught our attention, but it was not yet setting up for a valid swing trade entry for us. Often when we spot something that has relative strength, it may be several weeks or sometimes even months later until we actually spot a valid low risk trade setup. We're continually scanning the market, but we keep a watch list, a relative strength watch list of top relative strength stocks and crypto. And then when we spot ideal buy points, such as lower risk pullback entry points, then that's when we send a trade alert to members and let them know our exact entries and exits for those trades. So this first chart is to show you how we initially spotted the relative strength in SOL versus ETH. And now we'll go ahead and switch back to the daily chart of SOL, and we'll walk through how we actually spotted our entry and exit points of the first and second trades. In the intro, we said that there were two winning SOL trades, but we actually had a third trade, which was our initial attempt to buy SOL, and it actually led to a 6% loss. Now, this may surprise you because typically we don't see a lot of people talking about losing trades on YouTube, but we believe that understanding a losing trade and knowing how to properly control losses is just as crucial as knowing how to manage a winning trade. And it's also important for you to see that sometimes you have the right trade idea, but the trade simply doesn't work. So our first trade in SOL actually resulted in a 6% loss. So let's go through that one first, and then we'll dive into the two winning trades. So you see here on the left, this yellow box, this is the area that we just showed you earlier when it started showing relative strength to ETH. And after we saw this pattern, we looked for a pullback. With the Morpheus trading strategy, we don't chase breakouts, which means that we're not going to buy as it's ripping higher. If we don't catch the actual breakout point, then we wait for the first pullback. And in this case, we waited for SOL to pull back and dip below its 20-day exponential moving average. We follow the 8-day exponential moving average, this green line, the 20, the blue line, and the 50, the red line. And when we have a strong stock, we often will look for an undercut or a brief dip below support of these moving averages. And the stronger the trend, the less likely it is to actually dip below. So in this case with SOL, we saw that it pulled back to the 8-period exponential moving average, which was acting as support for about a month as it was rallying. But we wanted a little bit lower entry point, so we waited for a breakdown to dip below the 20-day exponential moving average. And when we saw that, we figured, okay, it's probably going to be a 1 or 2 day undercut. And this is a relatively low risk entry point. So we bought at 23.25, 2 days after the undercut of the 20-day exponential moving average. And when we sent a trade alert to our members, we said that we were going to set our stop at 21.95, and that being basically below the low of this pullback plus some wiggle room. And after we set our stop, the price initially did go back above the 8-period exponential moving average that first day. Notice how it popped back above it, but it was only able to hold for about 4 days before the price stalled and slipped back below both the 8 and 20-period exponential moving average. And for this period right here, for about a week, it almost hit our stop, held just above the 22 level, and then popped back above the 8 and 20-day moving averages. But again, couldn't rally, stalled out at the prior highs here. And this time, the selling momentum picked up and the price broke below the 50-day moving average, which, as it often does, a break below the 50-day moving average triggered further selling. And then we were indeed stopped out. We were stopped out on August 17th at 21.95, 1 day after the price broke below the 50-day moving average. So that resulted in a 6% loss. And you know what? No problem. Because we perfectly managed the trade, we had a valid reason for the swing trade entry, an undercut of the 20-day exponential moving average. We had our stop in the correct place. We had a tight stop just below the low of that pullback, and the trade simply didn't work out. And when a trade doesn't work, you want to be out. And that's part of trading. Any trader that says they don't have losing trades is lying to you. And knowing, as I mentioned, knowing how to manage losing trades and properly set your stops is key. But after this 6% loss on the first trade attempt, that's where it got exciting. And we scored a 58% gain over the course of the next two swing trades. So let's go ahead and dive in to the fun stuff and see how we pick those entries and exits on trades 2 and 3. After stopping out of a trade, if the trade continues to show relative strength, we often will continue to monitor it for a potential re-entry, but don't confuse this with revenge trading where you get back into a trade simply because you stopped out and want to get even. That, of course, is dumb and not advisable at all. But if the trade still is a valid setup and has relative strength, then it's something that we'd consider re-entering. So as we move the chart here, we scroll to the left, we'll see what happened after that initial losing trade, and that'll bring us to our second entry point. And our second entry point was on September 17th. So what was the rationale for our re-entry on September 17th? After stopping out, we began to keep an eye on a downtrend line that we noticed began developing from the highs back in July. And we'll go ahead and draw that downtrend line here so you can see what we were looking at. And this is the downtrend line that we saw. And when we see a downtrend line develop in something that we're monitoring based on relative strength, then we look for a potential breakout above that downtrend line as the entry point. Now, the breakout above that downtrend line occurred here in mid-September, but we didn't get a lot of confirmation yet. There was no volume surge, and we were still below the 50-day moving average. So we did want to, when we entered, keep a tight stop, but we took a shot based upon the fact that we undercut the prior lows. And also on September 11th, that was an undercut in Ethereum of the prior lows of a month-long range. So we like the risk reward of this trade setup on the breakout of the downtrend line because Ethereum had just undercut its lows. And we also saw kind of a bottoming type pattern developing here where we undercut and then started to form a base at the prior lows where it broke down. And so when we got back above the downtrend line and this 8-period moving average, that's where we decided to get back into SOL. And we sent a trade alert to our members, letting them know we were getting in at $19.15. We set our stop below the downtrend line, and then we just let the trade play out. The beauty of a rule-based trading system is that if a trade meets your rules, you can buy it, set your stop, and forget about it. The trade either works out and leads to a profit, or you stop out. But we like to use a set it and forget it method for setting stops because all of our trade setups are based upon an objective rule-based trading system. We don't trade based upon what's in the news or what's hot on TikTok or on social media. It's always a rule-based system. So let's take a look at what happened after our entry at 1915. Price action traded sideways, held at the 8 and 20 period moving averages for several days and chopped around. And then on September 30th, the price action broke out above the 50-day moving average, which also correlated to a breakout above the prior swing high and an area of horizontal price resistance. So this move above the $20.60 area here was significant on a technical level because it was not only a breakout above the 50-day MA, but above a prior swing high. And notice that this is when the volume started to pick up. And we saw that, okay, this is where the trade's going to start to work out and rally. And it happened very quickly. The very next day, the price action shot from 21.40 all the way up to a high of 24.50. It's about a 15% gain on October 1st. And we went ahead and made a judgment call to sell and lock in profits based on that. Now, why did we sell at 24.20 as opposed to staying long and letting the profits ride? Well, we saw that there was resistance from the prior highs back in July and August. That was pretty significant here. And you can see this kind of between the 25.20 to 25.60 area. We saw this horizontal price resistance that actually formed one of the anchor points of the downtrend line. So we knew that getting back above that could be significant resistance. So rather than waiting for a pullback and sitting around, we just made a judgment call to proactively take profits and lock in profits into strength as it neared the high, which was the resistance level. We got a bit lucky. We ended up selling near the actual high of that entire move. That wasn't our goal, We just were looking to lock in profits because of the resistance, but sometimes you get lucky and you get out near the absolute highs. So just to recap, we got a 26% gain on the first winning trade with a 2-week hold time after buying the breakout above the downtrend line and then selling into strength of the prior resistance levels. Now let's go ahead and take a look at the second winning trade, which was our third trade. Our second winning trade into SOL, which led to a 32% gain in just 5 days, was the result of a re-entry of our previous winner. Remember that we sold into strength at 24.20, and typically when we have a stock like that or a crypto that we sell into strength, we'll look to buy it back on a pullback, which gives us a lower risk re-entry point and a better risk reward, as long as, again, the relative strength remains. So after selling this, we then began to patiently wait for a pullback. And after several weeks of tight sideways action, we got a dip below the 8-period moving average and again got our undercut, which led to our initial entry, got our undercut below the 20-day exponential moving average. And then we got 2 tight sideways days of price action here. You see these 2 tight days of price action. This is called a volatility contraction. And when you've got a volatility contraction at a pivotal level, that often leads to an explosive move in either direction, depending on the trend. So this volatility contraction, the several days of tight price action here, stuck between the 8 and the 20-period exponential moving average. That really caught our attention. So in this case, our buy trigger then became simply a move above the high of this 5-day range, this tight 5-day range. A move above that level we knew would attract the buyers because it would be a volatility expansion, which often follows a volatility contraction, and it would put the price back above the 8 and 20-period moving average. And that's exactly what happened. We bought at 22.35 when the price moved above this level. We told members that volume was great. Volume was surging higher, so it confirmed the move. As usual, we set our stop just below the low of the swing low here. And immediately after entry, the trade took off. The very first day, the price rallied all the way up to test the high of where we sold at 24.20. Except since we bought back in at 22.35, by the time it was back up to 24.20, we had roughly a 10% gain already from the reentry. And of course, if we hadn't done that, we'd be right where we were, where we sold the first time. But again, swing trading, the beauty of swing trading is exactly that. You catch the swings in the market, you get out, and you look to re-enter over and over and over again, rinse and repeat. And that's the beauty of the Morpheus swing trading strategy. It just is effective and repeats itself over and over again. And I want to reiterate, by the way, that this swing trading strategy that we've been reviewing with you here works equally effective in any financial market. So not only crypto and stocks, but also works in commodities and Forex and any other financial market, because swing trading and technical analysis is based upon human psychology, and human psychology is the same regardless of which market you trade. Now, what prompted us to sell and take profits as the price rallied to the 29.65 area? We've removed the annotations just so it's easier for you to see what's going on here. And the big thing is that we knew that we were going to have some resistance back here. And this was the initial move higher that failed, which caught our attention about the relative strength. But because it was a failed breakout, we knew that there was people that bought at these higher levels that would be stuck and selling into this move because the stalling action that we had at the prior highs. So rather than stick around and wait to see if that would happen, we proactively made a judgment call to sell. When we probed above this resistance band here around 29, we sold into strength. And the price actually did several days later go all the way up to test the high, actual ultimate high of July. And now that's where we're at. We're actually trading just below the high of that move from July, which leads us to our final point of the video. And that is that if you trade crypto, SOL is definitely setting up for a potential breakout that you don't want to miss. And for that, let's go ahead and take a look at the weekly chart. This is the weekly chart of SOL. So each bar you see here is a full week of price action. Now, the weekly chart is great for showing us the big picture trend of what's really happening because it shows us so much data. We can see 1, 2, or 3 years of data going back very easily on the weekly chart. Now, the daily chart and the 4-hour chart are what we use primarily to fine-tune our entry and exit points, but the weekly chart helps us identify setups. And what we really like about this SOL weekly chart, especially given that the crypto market's heating up right now with Bitcoin breaking out and the altcoin market on fire. We like this potential setup in SOL because it's poised for a potential massive breakout on the weekly chart. This high right here, again, is the high from July that we just looked at earlier, and that's right around 32.13. So if the price gets back above this 32.13 level, and that will represent a move back above this band of congestion as well from last year. This was a significant support level right around 32 until the price action broke down below that level. So what that means is that that prior level of support has now become resistance. People who bought at this level and higher are now looking to sell into strength of the move. So that's acted as resistance now for the entire year. And the longer that we have a base of consolidation, the more powerful the eventual breakout above that base of consolidation. So we've had a base here. Basically, SOL has been trading sideways now for almost an entire year. Been trading completely sideways, stuck below that $32 mark. So what do you think is going to happen if all that pent-up energy results in the price of SOL getting above this high? Well, it often leads to an explosive breakout. You can think of base building as kind of like a spring. If you compress a spring, the more you compress it, then the more powerful the spring will pop away when you let go of it. And it's the same with the price action here you see in a base. The longer the base, the more powerful the eventual breakout when the price gets above that level. And right now, SOL is knocking on $32 door. So if we get above the high of this week, we're going to have a breakout above this level. And then what? Well, that'll be a breakout to a new 52-week high, which could lead to an explosive move higher in SOL, depending on the broad market. Based on what we see, we are seeing definitely the return of the crypto bulls in the altcoin market and in Bitcoin. Again, we trade what we see, not what we think, and that's just what we see. We see a lot of momentum coming into the market right now, and SOL has the potential to stage a massive breakout if it gets above this year-long sideways base. And don't forget, this is the key part here, don't forget that SOL was a former leader in the bull market of 2021. SOL had, as you may recall, if you were trading crypto back then, SOL broke out from $30 all the way up to $250. So it was about an 800% move, and it only took a few months to do so. And those of you who were Morpheus Crypto members back then may recall we made some nice profits trading SOL during that bull phase. So will it happen again? I don't know, but the potential's there, especially if the altcoin market starts heating up, because SOL has strong fundamentals and former leaders do tend to become leaders again when the overall market conditions improve. So you can see here the big picture going back several years. If SOL gets above this year-long consolidation above the 32.13 level, then we could have an explosive breakout. Now, I don't know if we're going to rally all the way back to those prior highs, but hey, even if we pop up to, let's say, the next resistance here from around the $48 level, well, that's quite a nice trade. $32 to $48 would be about a 50% gain. So don't miss this potential SOL breakout if we get back above this level. In the Morpheus Crypto service, we're already back into SOL. We re-entered SOL yesterday. We notified members we were getting into SOL with a partial position when it first pulled back slightly on the 4-hour chart, and then we added to the position when it held and formed a higher low in the 4-hour chart. So we're back in SOL with a price that is near the current level, actually, and it's a little bit anticipatory. We could wait for a breakout above this high, but we like the relative strength and we like the price action that we're seeing. And so we're building a position, and we will probably look to add to the position if we get a move above this level. As always, we've got a protective stop in place just in case the trade doesn't work out. If this breakout attempt fails, we'll be out quickly. So again, just to recap, remember we had 3 trades. The first one was a loser. We lost 6%, but the second trade made a 26% gain. Third trade made a 32% gain. And that's what you want to see if you have a successful swing trading strategy. You're going to have losing trades, of course. Everybody has losing trades. But the losing trades, you should be losing less than you're making in the average winning trade. You want to have at least a 2-to-1 risk reward, meaning that your potential profits are at least twice as great as your losses. So in this case, we lost only 6%, but our two winners were 26% and 32%. Obviously, the math works, and when you've got those kind of numbers, it's easy to understand how over the past 21 years that we've been doing this, swing trading stocks, and over the past couple of years, swing trading crypto, it's easy to see how the Morpheus swing trading strategy has led to consistent results for our members. So if you're not yet a member of Morpheus, go ahead and head on over to morpheustrading.com. Drop your email in the form on the homepage to receive our top daily trade ideas and more market analysis, and discover how our swing trading strategy can help you to learn to trade with confidence and become a master MTG trader. We hope you found this video insightful and educational, and we'll see you back here in our next Morpheus swing trading video.